Welcome to today's webcast. Topic for the session today, Key Procurement Trends for 2015. And I think the timing is very opportune. We're approaching the end of the year, so right now it gives us a chance to look ahead at what we expect to be some of the key procurement trends to focus on for the coming year in 2015. And what we're going to go through today is really a joint research project conducted by Zycus in concert with the Hackett Group. I'll introduce our guest speaker from the Hackett Group. Chris Sawchuck is a principal and global procurement advisory practice leader at the Hackett Group, and you can see from his bio extensive experience over 17 years in supply management, working with both large and small-sized companies on a global basis, helping them improve procurement process, design, technology enablement, operations, strategy planning, organizational change, and strategic sourcing. Just a quick word about Zycus then. We are a best-of-breed, source-to-pay suite of solutions, an integrated suite of source-to-pay tools that encompass both the strategic aspects of procurement, things like spend analytics and strategic sourcing category management through contract and supplier management, as well as operational procurement of the full procure-to-pay cycle, requisition through POs and invoice management as well. But just to give you a high-level overview for a little bit of the background on the study, we commissioned this during the August and September timeframe of this year, and the study encompassed over 200 participants, most of which were large companies, so somewhere between $750 million and $100 billion in revenue. And it ran the gamut of various vertical markets or industries. So we really feel like we've got a great cross-section, and we wanted to probe this audience, poll the audience on what are some of the key priorities and capabilities that they're looking to identify, and where do they see gaps that they plan to address. We looked at, from a technology investment standpoint, what are some of the prioritized investments that folks are planning to make in the near term, and then take a look at performance, both in terms of some of the classical or traditional measures like cost savings or spend reduction, and look at current levels of performance as well as future expectations, and how organizations are planning to realign or reallocate budget and resources to address the new areas that they want to focus on, things like getting more spend influence and control, and also really gauge areas where procurement leaders are looking to unlock new sources of value, specifically in areas such as supplier measurement and innovation visibility. Bubbling to the top were the goals of reducing the cost of procurement, so increasing efficiency, but also increasing procurement's influence scope within the organization, so being more efficient, but also more influential. The fact that a traditional measure that most procurement organizations are uniformly measured on is the ability to reduce and avoid purchase costs. That came in at 26%, but the innovation was rated almost as highly, 23%. You know, we kind of started this study at this top level. What are the key issues organizations will be focusing on for 2015? Next, we segued into the capabilities that those procurement organizations will be focusing on prioritizing for investment in 2015. So things that rose to the surface here, obviously, were things like procurement analysis and reporting, strategic sourcing, focusing on continuous improvement, supply market intelligence, among the ones that were most frequently cited by our survey respondents. And when we asked our respondents to list their top three, and we looked at the top three responses across the board, from a technology standpoint, some consistent trends emerged. The fact that there's a premium placed on rolling out true self-service tools, web-based tools, self-service tools, so a focus on ease of use and adoption from a technology standpoint, And at the same time, folks are looking for those technology initiatives to enable much more accurate data management, better data stewardship, and to be more robust in the areas of business intelligence and analytics. So it was interesting that those rose to the top. Just below that, of course, I think there's also a focus to leverage existing technology investments and platforms, get more out of the existing technologies, but maybe layer on top of that some additional capabilities that are more self-service, more analytical, driving better data accuracy. The next area that we focused on was the procurement operating budgets in 2015 and what the expectations would be as far as, would the investment or the operating budget be actually reduced, held flat, or might we expect some increase? And the results here, of course, showed that the average was pretty much going to stay fairly flat, a slight increase. What was your expectation, and how would you interpret these results?
Well, based on all the conversations I've been having, with organizations, around the globe, the expectations that I had was that we're going to see a fairly flat budgets going into 2015. This is actually an improvement over what we saw coming out of the downturn back in 2008, when we actually saw, budgets within procurement, maybe not as big as decreases that we saw in other functional areas, but the budgets were decreasing. And then what we saw was a bit of an increase over the last several years to the point where we are now that we're seeing some leveling off in that. And the point here is that, though we see a bit of an increase, it's barely an increase. It is relatively flat as we look out going forward. And that's pretty much in line with our benchmarking information as we look at, the top performing organizations, what we consider to be world-class organizations over the last 5 years. What we have seen is a bit of a leveling off in their investments in the overall, conducting of the procurement activity or the function itself over the last 5 years. And where you really see the action is not necessarily in the overall top line in terms of what are we investing in the overall function itself, but more of the action is happening in terms of where are we allocating those investments. And where we're seeing that reallocation occur is to other types of processes and activities, certainly more into the supplier management and development activities, as well as further up into strategy, category management, et cetera. And even a bit of a decrease in some of the sourcing execution types of activities. So it's not surprising, and it's pretty much in line with what we've been seeing over the last 5 years from an investment standpoint.
So here's a question that strikes me, Chris, and spoiler alert here, we're going to talk about savings in just a second and kind of show that, at least according to the survey respondents, that most procurement organizations continue to deliver consistent savings. It's a money maker. So when you look at that performance, why isn't it more of a slam dunk that organizations would actually choose to invest more in the procurement organization to accelerate, or amplify those savings returns?
I think it all comes down to is, if I invest more dollars going forward, will I get the same return on those investments? And so I think, one of the things that organizations are looking at, especially the organizations in which procurement sometimes report to, is a return on investment. And depending on the organization, when we look at world-class organizations today, we're seeing a 9x return on the investments they make in procurement activity. And when I look at procurement activity in this particular case, I'm looking at not just the sourcing and supply management types of activities, but also including all of the transactional activity. Obviously, if I only looked at the sourcing activity, that return would be much higher. But we're looking at a 9x. So for every dollar I invest in the procurement function, I'm getting 9 in return. The question then becomes, if I invest further, am I still going to get the similar type of return on those dollars that I invest as I have been? And so there's this desire to maintain the return or the level of return that we have been getting without diluting that. I think the other thing that's really driving here is not just, and it's not necessarily something that's specific to procurement, but the idea of doing more for less. We've always used those, you hear those terms for many years, but that's pretty, prevalent across our corporations today, and expecting, more in return for lower investments. And I think, in some ways, we are fortunate in procurement that, you do see organizations that are, investing a bit more. But, in some organizations, overall, it's a very slight investment. That's actually positive compared to many of the other functions within our companies where you actually see a lowering of the investments in those functions, where at least we're actually able to sustain the investments we do have with the expectation that we'll continue to get a return.
Yeah, so good news at least in being able to either hold budgets flat or see a slight increase as we saw from our respondents. But I guess the other end of that spectrum, as you're saying, is expectations are not lowered at all. Expectations continue to grow. So deliver more with the same or less in some cases, and looking for those productivity and efficiency gains that will continue to generate those kinds of savings. Okay, that's a great perspective and a great segue to look at savings then, because that's what we asked as the next question, to take a look back in just the past fiscal year, and what was the total spend savings that were reported, in this case counting both cost reduction and cost avoidance. And see your comment here, Chris, this was a very good year for spend savings. What do you think drove that?
Well, I think it's a couple of different things. And, one, and as we came into 2014, we asked organizations, similar to what we asked at the beginning of this survey, the first few questions that we reviewed, is what were you focused on? And when we came into 2014, a lot of the focus was expanding our influence across the organization. And, I think one of the things that organizations are understanding and, certainly understand is that we can't continue to go back to the same well and, expect new types of returns. We're going to have to, get our arms around a broader swath of the overall spending of the organization. And, what we're seeing is that, we are making inroads in terms of increasing our influence across the spending of the organization. And I think, as you look at organizations and what is really driving this, I do believe that our ability to continue to increase our influence across a greater swath of the spend is driving a lot of the returns that we're seeing currently in organizations.
Okay, great news. And, at this point, wanted to try polling our audience, just looked back in our survey results at what type of savings were produced during the last fiscal year, during 2014. And we wanted to ask our audience to weigh in on a poll looking ahead now into 2015. What type of savings contribution, what type of performance are you forecasting? Do you think, A, it will be much higher, or B, continuing on the same trend but incrementally or just slightly higher? C, would you expect it to be pretty much the same, pretty flat? Or D, do you expect that some of those savings are starting to trail off, maybe reaching the point of diminishing returns to where D, they're slightly lower, or perhaps E, significantly or much lower than before? So again, we'll give you a minute here to think about your response. Would love to get a sense of where our audience sees the trends going from a spend savings or cost reduction standpoint going into 2015. Chris, any early prediction?
Well, I know what the next slide says, and so my expectation is, with the focus on, what I was saying before, there's still a lot of opportunity to close the gap in terms of our influence across the spending of our organizations and bring much more professional discipline to that. I believe that, with that opportunity, it has the potential to continue to help us drive even more savings on a go-forward basis, even though our ability to continue to sustain the savings in the areas we have been focused on will be challenged.
Okay, great. So we're seeing the poll results come in right now, and it looks like if I took the top two, 50% are saying that savings will increase. Not as many are as highly bullish. 9% are much higher. Most, about 41%, say slightly higher. But if we took, the top three responses and said savings will be at least at the same level, if not higher, that's fully 80% that they expect to see, for the most part, some pretty significant savings contribution, and that's kind of what you predicted. And Chris, when we look at the poll results we just got from our audience and compare to the survey that we had sent out before, some pretty similar findings, it seems.
Yeah, almost a mirror image as you look at these. And it's interesting as we look at this, and one of the comments I made here is that as we looked at last year, the expectation is that people are going to close out 2014 with savings near 5% overall, reduction plus the avoidance, which is very robust, historically. The opportunity here is as we look forward into 2015, the expectations are we're going to even see a little bit more. And what we're predicting here is, something probably in the neighborhood of 5 to 6% as we look further into 2015 and end the year. This is fairly significant and certainly a big significant contributor to the corporations.
Yeah, so a bullish perspective on 2015 from our audience today, as well as the folks who responded to our survey previously. And segueing into our next topic area, that certainly bodes well for the future, because if savings are forecasted to hold steady or grow and expand, the ability then for procurement to potentially increase its influence over spending could just increase those savings even more. If I can address a broader pool of spend categories and deliver similar results across a broader base of spending, that would be even more encouraging. Now, on the other hand, our results here showed that just 51% of organizations are able to influence 60% or more of the total indirect spend. So, as you comment on the results here, Chris, I'd be interested too to get your perspective on, what are some of the challenges that organizations typically face in trying to increase their influence over certain categories of spend? How do they get over the hump, so to speak, if they're sort of stuck at that 50, 60% of spend influence mark?
Yeah, and it's been a challenge. I think there's a couple of things. I mean, what we saw back in 2008 coming out of the downturn, especially going into 2009, that, with that event that occurred, economically to pretty much all organizations and companies that are out there, was that we had a significant challenge in front of us. We had a lot of deflation in the marketplace, et cetera. And with that, and with our company's focus on maintaining their margins and hopefully improving them, but, for the most part, it was maintaining their margins. The challenge is how do we go do that? And so a lot of the constraints that we had in getting access to areas of spend that, maybe the procurement organization wasn't able to bring some professional discipline to in the past, sort of went by the wayside. And we got access to other areas. And what we saw from a benchmarking standpoint is that the level of influence that organizations were able to increase from 2008 up until about 2011 increased about 10 basis points comparative where we were prior to the downturn in 2008. The challenge is we still have, and you can see it from these numbers here, a fairly significant gap. in terms of when you look at those best performing organizations, those that are influencing, 90% or more of their spend, and in Hackett's terms, we would characterize those as world-class organizations, and that's only represents about 10% of the organizations. And so when you look at the average, where people are today, there's still a significant gap there, and I believe that if we looked at these numbers here and we looked at those organizations from the poll that we just did, and those organizations that saw the potential for slightly higher or much higher savings over the next year, we would also see that those organizations were also expecting to increase their spend influence across their organization as well, because I do believe there's a direct correlation with increasing our influence as well as driving some of these higher levels of savings that are expected in the marketplace next year.
Oh, absolutely. And as we look at the next prompt that we had for our survey respondents, following up on that theme, we said what percentage of your total indirect spend is therefore being sourced by a procurement professional. So it looks like a pretty close correlation between spend that's influenced and spend that's sourced. And I'd be interested in your perspectives here and any best practices for how do you turn influence into that kind of direct sourcing control.
Well, it's interesting to me, and the question is, do you want to turn it into direct, sourcing control, right, by a procurement professional? What we try to differentiate here is, that spend that's out there that's being influenced by, a procurement or a disciplined procurement process, even if it's not necessarily being sourced by a procurement professional. And, what is it, and when we look at that versus that spend of the organization that's actually being sourced by, specifically by a procurement professional, we really don't see much of a difference. There's a small gap, whereas, we're about 4 basis points below, when you look at procurement professionals versus, what is actually being influenced by a disciplined procurement process. There's not much difference, which basically tells us that for the most part in our organizations, those areas of spend that we are influencing and the way that we're influencing it is by actually doing the actual activity itself. I think as we look forward, we may find as we have to, we try to, influence a greater, percentage of the overall spend, but we may look at certain areas that we may try to influence in a different way. Some organizations are out there, where they, bring together a governance structure for areas of spend that may not, where the formalized procurement organization isn't necessarily touching, but they're following disciplined procurement processes. So it's being influenced, but it's not necessarily being touched. And I do believe the gap between these will grow in the future as procurement on an overall basis takes on more spend into its overall function itself. And part of the reason I'm saying that, if you go back to some of the earlier slides when we looked at the cost of procurement and what our expectations going forward are, we're not seeing an increase. So if we're not increasing our investments, the only way that we're going to increase our influence is to be able to do it in a way, in the organization where we actually rely on not necessarily touching it all by procurement professionals, but putting a governance, process in place and structure that we can actually influence it in a way that may not necessarily require us to touch it.
Right. Interesting perspective. So if you're not going to get more resources, the best way to increase your span of influence anyway, if not control, is maybe to be more center-led in terms of the processes and the infrastructure, so that even if it's not directly sourced by procurement, it falls under that mantle of, good sourcing and category management practice is what it sounds like.
Mm-hmm.
So that's an interesting segue again to the last poll question we wanted our audience to weigh in on. It deals with resource allocation, and certainly one key enabler to achieving greater spend influence and or control, I think, is to be able to align more resources to the strategic aspects of procurement category management, strategic sourcing, for example, as opposed to some of the more tactical and transactionally oriented activities. And what we wanted to do was get a sense as we open this poll to look at your current organization and how would you say the allocation of resources is today in the current environment between strategic and tactical activities. So, the first choice would be relatively low allocation of strategic resources below 15%, and then looking at bands. Option B would be somewhere between 15 to 30% strategic resource. C being 31 to 50%. And then as we go, organizations that have already, aligned the majority of their resources towards strategic activities as opposed to tactical or transactional, with D being 51 to 70%, E being 71 to 85, or, maybe the holy grail or nirvana of procurement above 85% strategic. So maybe we'll give you about another 20 seconds or so just to come up with a baseline, just a guesstimate of the current resource allocation, that predominates in the market for our audience today. So we'll close the poll here in a second, look at the results, and then we'll have a chance, Chris, to compare to what we got back from the survey as we looked at this resource allocation between, strategic and tactical. And I guess just looking at it intuitively, most organizations would say, if I had my druthers, I'd rather have more of my resources engaged in those strategic activities around category analysis, category management, strategic sourcing, maybe supplier relationship management. But that doesn't always marry with the reality of, having to keep the lights on and process high volumes of transactions, maybe not as efficiently in all cases as would be desired. So if we can close the poll and take a look at those results, and I see they are coming in right now. So look at the, almost half, I guess 49% are somewhere at 30% strategic or below. And then, if we take a look, certainly the vast majority below that 50% mark if we add in the ones in the 31 to 50% range. So we'll take a look at how this compares in a quick second with when we asked our survey respondents in our research study. But Chris, any surprises here?
No, and I think what you're going to see as we flip the page over to what we surveyed back in the August-September timeframe, as you can see here, is very closely mirrors, not exactly, but again, we have close to 50% of the organizations having 30% or less of the resources focused strategically. That's very similar to what we're seeing here on the survey that we did live. Which I think tells us a couple of different things. One is, most organizations that you go out to, if you ask them, where are we today in terms of strategic versus tactical, especially the ones in that 30% or lower range, which is about 50% of the organizations, would tell you that they would like to be more strategic going forward. And, going back to what I was saying before, when we look at organizations, if we're not adding headcount and the expectation is that we're going to deliver more value next year, when we ask people, from a savings standpoint, the expectations, on an overall basis, we're going to deliver more spend savings next year than we had over this past year. And this past year, the expectation is going to be very robust. So if we're going to do that, we're going to have to make some allocation changes. We're not going to do that and be able to deliver that value being as tactical as we are today. So we're going to have to make that shift. And what I was saying before, if we're not, especially with the world-class organizations, they're not necessarily adding costs or headcount to their organizations. What they are doing is they're making allocation changes within the organization. So you do find this swapping of tactical investments into more strategic investments where we can get a better return for our organization. So I think you're going to see that continue as we look forward, especially as we try to influence and increase our influence across more of the spending of our organizations.
Great points, Chris. And I'm curious, with all the benchmarking you do, if you have a sense or a rule of thumb for, at full maturity, let's say, what should an organization, because they're never going to have 100% strategic, right? Somebody's got to do the transactional or tactical activities. But do you have a sense for what is sort of the optimal mix that should be targeted, or is it so company specific that you can't really set a rule of thumb?
Yeah, certainly it's going to be some influences based on, either the type of company, but not as much the type of company, but the type of industry that some organizations are in. But the bigger driver is really the maturity of the organizations. And, in terms of, how they're actually conducting, these more repetitive, transactional types of activities. I do believe that we will continue to see this shift. We've been seeing it for the last 10 years. Certainly more strategic is functions. And, one of the things I can look at is look at those world-class organizations. And as we look at them and we peel back, how they're allocating their investments, they are much more strategic. And in many ways, you can use it as a guidepost to say, well, where could we be on a go-forward basis? Certainly it's north of 50%. What's more difficult for me to say is, is it, where should it be? And I think, what you need to look at is some of these numbers in some of these higher areas, right? And so when you look at organizations, we're looking at 5%, 14% of organizations in the 51 to 70% strategic. I think those are some of the areas that you have to look at, those percentages, say, this is probably where the possibility is. There is going to be a level of investment on more transactional type of activity, but that's going to get thinner and thinner over time. Not going to happen overnight, but it will thin out over time.
Right. In fact, I imagine a trend like BPO could certainly skew those results, because I would think the transactional activities would be amongst the top candidates to outsource as a procurement leader. Would you say that's true?
Yeah, absolutely. When we do our benchmarking and you look at, where organizations are utilizing third-party, outsourcing BPO types of providers, some of the more dominant areas have been in the transactional, types of activities. But we do see a growing influence into some of the sourcing activities, as well as, market intelligence types of activities as well.
Okay, interesting trend there. Excellent. So the next topic that we wanted to cover in our key performance indicators and trends here was looking at some of the efforts that have gone on in the area of supplier rationalization and consolidation. And one of the best measures, I guess, for how effectively an organization has consolidated the supply base is looking at what percentage of the suppliers account for the lion's share, 80% of the total spend. So here we see that with our survey respondents, over half the organizations have more than 8% of their suppliers that account for 80% of their spend. So as you look at these results, Chris, any surprises or any conclusions that you've been able to draw?
Well, a couple of things. And when you look at suppliers, and, in this case, we're looking at both direct and indirect spend combined. One of the things that you do find is if you were to split this direct and indirect, we would probably see some numbers that were quite different. And the comment that I make here on the slide is that when we tend to look at direct supply bases, they tend to be much more rationalized, much more optimized, partially due to the characteristics of the suppliers and the supply markets that we participate there, but also due to the maturity of our organizations there. And so you see much smaller supply bases. So one of the other key measures that we look at, not just, what percentage of suppliers make up the top 80% of the spend, but we also look at just, what is the total supply base? If we have $1 billion in spend, what number of suppliers, make up that $1 billion of spend. And so we want to look at the absolute number as well. Now, when we look at that for direct supply bases tend to be much smaller. And again, partially due to the characteristics of direct spend versus indirect spend, but also somewhat due to the maturity of what we've done in the direct side versus the indirect side. And so if we were to split this up and we were to look at direct and indirect, what I would expect is that we would see numbers that were higher here for the direct spend than on the indirect spend, primarily because the indirect spend tends to have a much larger supply base than what we do on the direct side. And so in that case, you tend to find the percentage of suppliers that make up the top 80% of the spend to be a much lower number than what we do on the direct side. Now, saying that, typically there's a lot of folks focusing on their tail end spend. People use the term tail end spend management on the indirect side, and there's a lot of opportunities to really help to rationalize that on a go-forward basis as well.
Excellent. Thanks, Chris. And, getting into the next area that we wanted to address in our survey here, we want to look at supplier measurement. And the question here was, to what extent does a formal scoring methodology exist for evaluating suppliers on key performance indicators such as cost and quality? And I guess a little bit surprising in the fact that, a significant number, more than 25% of organizations don't have formal supplier performance scoring at all, and a significant portion really focus on only the top tier suppliers, maybe as a matter of necessity because of the effort involved in producing those scorecarding type tools. What are some of the conclusions you draw from these results, Chris?
Yeah, I think it's interesting, right? I think from the perspective that you made the comment that over 25% of the organizations don't even have a methodology in place today. It's an opportunity, right? And I think a lot of that's what's driving that is the maturity of organizations. So as we get further into, and some of the comments I made before, we are seeing people move from just focusing primarily on sourcing execution activity more into strategy, category management, as well as deeper into the supply base. How can we generate additional value out of our supply base that exists already? Well, it starts with measuring their performance and managing that performance over time. I mean, there's certainly other things that we can do with that supply base in terms of innovation and, enabling some of those types of activities within the supply base, but it starts with performance. And so what I would believe that over, the next several years, some of these organizations, would be further, going into doing these types of activities. So, having a quarter, that doesn't, that do not have a formal scoring methodology, I do believe over the next several years, that number will shrink. Now, the other question was around, the focus more specifically on strategic suppliers. Supplier performance and just managing suppliers is difficult. It takes a lot of effort. And so, segmentation becomes a important, I'll say, capability that a procurement organization needs to develop in terms of managing suppliers. Segmentation from a lot of different ways. For example, who will you go out and measure? In this case, we asked a question around strategic suppliers, and what we find is that more organizations are focused on their strategic suppliers in terms of managing them and measuring them than what we see in the rest of the tail base. That makes sense to me, right? I mean, there's a lot of suppliers we don't have to, right? We're going to generate 80% of our value, 80% of our spend is coming from that, those strategic suppliers. Then, that's where we ought to focus our effort and get a well-honed capability in terms of managing that performance, because that's where we're going to get the biggest impact for our companies. We can't do everything. And it's sort of like when we think about risk, we think about innovation, et cetera, we have to make decisions in terms of who do we focus on and what are the criteria we're going to utilize as an organization to determine who are we going to measure, who are we going to manage the performance of, no different from a risk standpoint, from an innovation standpoint, et cetera. So segmentation, and this very much shows that segmentation is being done here, will be one of those core capabilities that procurement organizations need to have as they better manage their supply base.
Great point, Chris. And the last trend that we tracked here related to supplier measurement and certainly collaboration, especially with those most strategic suppliers, is measuring the value that comes out of that supplier collaboration in the form of innovation. And I know you see this as clearly an emerging space and a key metric going forward, and probably a lot of different approaches being adopted to measuring innovation. Maybe you could outline some of those approaches for us and interpret the results of our study.
Yeah. Well, the first question we asked, and it's on the right side, is do you even measure innovation? And, you had, about 50-50 in terms of measuring it versus not measuring it. And, in some cases, you might look at this as being, somewhat linear to or correlated to, do you actually focus and do you see innovation or supplier-enabled innovation as one of the key areas of focus for the organization? So if we take that and say, well, all right, 50% of the organizations actually measure it, then the question becomes is how do we do that? And, what you find here is that, there's a lot of activity measurement going on. The first thing that we asked is, do you measure it based on the number of suppliers of new ideas that are submitted by suppliers? So if we're going to try to encourage this activity within our supply base, how are we going to ensure that, or bring visibility to, is it actually working? So one is, what is there activity occurring? Are we getting new ideas? Are we taking some of those ideas and creating, using them in our internal processes, developing new products, new processes, et cetera? But the other thing, and what I have in the box here in the red, is those organizations that have taken a step further. And say, not only are we going out and trying to see if the activities, through some of the activities that we have, we're encouraging good things to happen, but are we actually having a result? Is there an output performance as a result of these activities? And so here is looking at the impact on the organization from these innovation types of activities in terms of revenue, in terms of quality, in terms of process efficiency, et cetera. And so you do see a percentage of organizations that are measuring these types of activities. I do believe that you're going to see, if you were to go in and peel back the onion a little bit, look at more specifically what industries these organizations that are measuring represent, you're going to see more heavily dependent or more dominated by, organizations in the CPG industry, in the high-tech industry, et cetera, those that, have tended to much more advanced in some of these areas than what we see in potentially in some other industries, especially, more on the direct side in manufacturing industries than what we have seen on the indirect or service-based industries.
Okay, so it's certainly emerging faster in certain vertical markets, but a trend to be on the lookout for as we go into 2015. Chris, I know just a couple minutes left, but we really appreciate everyone joining the webinar today to share in their perspectives in our polls. We appreciate all the respondents that weighed in on our survey as well, and all of your great insights. So we covered a lot of ground. Any final notes that you'd like to hit on in summary?
I think, what we're going to see in, 2014 and 15 as we go from 14 into 15 is in some ways more the same, but you are going to see, and I think some of the interesting things that, that will be somewhat continuations of what we began to start seeing over the last couple of years is, the continued focus on increasing our dominance and influence across the organization. We've had a lot of wind at our backs to be able to increase that over the last few years. And the key is what are we going to do to continue to do that and really get at some of these areas of spend that, we may have had some, more challenges in actually getting after. And so seeing that, I think, is going to be absolutely essential for procurement continuing to generate the kind of value that we have the opportunity to deliver within our organizations. I think the last two things would be this, the idea that even though sourcing continues to remain a top, capability development area for organizations, along with some other areas, the focus on analytics and intelligence capabilities continues to grow, not just to support our category processes, within the four walls of procurement, but to support the business as well. many organizations building these intelligence capabilities to support some of their internal business processes, whether it be product development processes or M&A processes, et cetera, but building these intelligence capabilities and servicing that type of intelligence into these processes to make better decisions, along with the innovation. So you're going to see a lot more and continue to see more of the tapping into the capabilities that exist outside the four walls, not only the function, but outside the four walls of our company.
Great perspectives. Thanks so much, Chris. Really appreciate that, and really sets the tone for not just looking back on where we were in 2014, but going ahead. What are some of the top priorities and things that are top of mind in our space as we enter 2015? So just to wrap up today, I wanted to call your attention to a future webinar that I'll have the opportunity to conduct here coming up the 18th of December. And, you know, this study that we commissioned here was to look across the board at key issues and capabilities and trends with regard to the entire procurement function. This upcoming webinar on the 18th of December will drill down into a specific area, procure to pay. And we did a similar type of study where we benchmarked P2P performance to get a sense of the current state of P2P, and we'll be revealing those results of that study on this upcoming webinar. We hope you join us for that one on Thursday, December the 18th. And we want to thank everyone for your participation today. We will be distributing the slides post the webinar to everyone who attended. And likewise, you have our contact information. Apologize that we didn't get a chance to answer audience Q&A, but I'm sure if you reach out to either myself or Chris, we'd be happy to address any specific questions you have about the topics that we covered in our survey today. So once again, thanks everyone for attending. Thanks so much, Chris, for all your valuable insights, and have a great day.